Good afternoon, everybody. My name is Lawton Ho here at Verified Investing, and I'm joined by Drew Dosek for Trading the Close, where we cover all of the action in today's markets. Today was kind of exciting, but kind of not, right, Drew?
Started off with fireworks. CPI data came in hot. Markets were selling off hard. The 10-year yield spiked up. And then all of a sudden, buy the dippers showed up in force, and then the markets just started floating higher. So it was an unusual day.
It was. All right, let's get into the charts. I'm not going to hold these audiences from the excitement of this market any longer.
Right. So first off, let's just see this heat map. Red all over the place. And that was because of the drop. The hot CPI pushed the prices of the market lower. But as I said, all day today, everything recovered. Everything just bounced right back up. You can see right here, though, everything ended up fairly flat. Dow Jones down 0.5%. NASDAQ is flat, up 0.06%. S&P down 0.3%. U.S. oil did have a down day. Oil was up the previous 3 days, so it makes sense for a cool off on oil. Gold is up, and Bitcoin rallied too. Bitcoin was teetering with breaking down earlier today, but it was nice to see it bounce back up. So, all right, that leads me into the SPX. Let's look at that. This was really neat, guys. I've been talking about this the last few days. I said 6,100 on the top is your level, and then 6,000 on the bottom is going to be the area of support, and that happened exactly today. We see the price action opened up here, moved down just a little bit lower, kissing that 6,000 area of support, and then just bouncing back up. So basically, after CPI data, as far as just technical analysis on the charts, it's the same old chart that we're looking at after the last couple of days.
Yeah. Oh, and I just wanted to interject and ask a question, Drew. So yeah, CPI data comes in lower than expected, and then the markets have a sell-off initially and then rally back. So what does that kind of tell you about the psychology or the state of the current markets?
Right. That's a good question, because really it's one that can't be answered directly, except for we're still in a bull market. We still have buy the dippers coming out of the woodworks, pushing this market up. I'm still scratching my head wondering, why are people buying stuff up this high? Doesn't make much sense. If inflation's going to be sticky, then we're going to have higher rates for longer, which then also implies that money's not going to be that easy to get, which then would hurt on margins. So it really is kind of baffling, but the fact is price is where it's at, and we're still maintaining within this wedge pattern on the SPX. Which way are we going to break? We're going to find out in the next coming days, because there's not much room left on that wedge. All right, so that leads me into the SMH. Yesterday I mentioned to you about the SMH, how we were trading back within this parallel, and you see now we have retreated back down. So the likelihood that this will continue sideways is somewhat moderate. I anticipate potentially curling down lower in the coming days, since we already poked up and we didn't get above, and now we're starting to come back down. But then this next chart I want to show you with the 10-year yield, this was really the story of the day for me, because what happened with the yield, you see here, we were on the verge of breaking down. Lawton had pointed out a head and shoulders pattern that you see on the charts right here. Right here. Oh, geez. Here we go. Right there. There's a head and shoulders pattern that Lawton noticed. You see we had a measured move down here. Obviously that didn't happen. It caught support on this trend line, which if you zoom out more, it's actually an inverse head and shoulders. We have a measured move on the 10-year that's still intact because we didn't break down on this line. Measured move up to 4.986. Now if the yield gets up to 5%, we're going to have a lot of problems. Talking about easy money situation going out the window, that's going to be very hard on the economy as well as other businesses in the long run. So something to look out for if we do push up higher in that 5% area. The next couple charts, I split it up because really gold and silver are doing about the same thing. I had mentioned to you before about silver, how it pushed up, and I was expecting more consolidation moving sideways. We had a price drop after that CPI data release, and then price bounced right up, continuing with that consolidation. Gold, very similar situation here too. Yesterday we put in what would be almost like a doji candle on the gold chart, but then we sold off immediately with the hot CPI data, and then since have retraced back up. All that really matters is where that candle closes of the day. And when I see this, it's just sideways consolidation on gold. I would anticipate gold to kind of start going down a little bit in the near term, just because we've had such a great run on the move up, maybe even retracing this middle area of the parallel, which is right about $2,840. All right, next up with Bitcoin. Bitcoin was teetering on the verge of breaking down. I mentioned to you this yellow trend line that goes and cuts through the parallel right now is roughly around $95,000. And since this is inclining, the longer that price bounces off this level, the price is going to increase. But we see here with wick, we've been piercing and piercing and piercing this level. Buy the dippers, as I said before, are coming out and pushing the price of crypto back up. So what do you think about that?
Yeah, I'm just curious. I mean, crypto is different from the stock market, but I was just curious as to how does Bitcoin usually act when the stock market goes up or down?
Yeah, the Bitcoin and crypto in general is a risk-on asset. If the markets, the S&P 500 are selling off, you can almost guarantee crypto is too. And what I found too is that crypto is usually a leading indicator, meaning that once crypto markets start selling off, the S&P 500 and the rest of the markets may not react the same day or even the same week. It's kind of like a front runner for what's going to happen with the rest of the markets because it's a risk scenario for an asset. Cool. And next couple charts I want to show you the biggest movers of the day. So these were off of earnings. CVS, what an awesome, amazing move up on earnings. You can see price right here closed at $63.22. Day before was right around the $54 area. So fantastic move up on CVS. In addition, you can see what happened here. We had a big sell-off, a rebound, another sell-off after hitting an area of resistance, and then we have now jumped up above that area. And this is an inverse head and shoulders pattern with a measured move. That's right, measured move up to $74.08. This could be a big move for CVS, but I don't expect it to go straight up there. What's likely to happen is that we're going to have price action right here, as you see. Price action potentially curl down, maybe even get as low as this trend line before bouncing back up, finding resistance at 67.71 and then 74.08. That's all granted that the markets are going to be pushing higher and doing well in the near term.
And I've never seen, Drew, I've never seen a inverse head and shoulder or head and shoulders with such a large gap. Is this still valid even though it gapped up?
It is, yes, it is. Because in essence, you can think of the price action going like right through here, even though it didn't happen in this area. But what that tells me is that there needs to be some sort of retrace, or the likelihood of a retrace is a little higher. And the reason being is because look at that big gap, just as Lawton noticed, and gaps are made to be filled. It doesn't mean it's going to be filled in the next week, the next month, but gaps are made to be filled. It's almost like a magnet attraction. When price gets underneath this area, we're going to be heading down and catch support right here on that trend line. So yeah, it's a good question there, Lawton. And next one up, and last chart of the day, we have Zillow. We were able to take Zillow as a day trade this morning in the day trading room, in and out of it in what, 3 minutes, 5 minutes, something like that. Amazing trade. Those are some of my favorite ones to do. And the reason I was able to find this trade was because of the longer term trend lines. These longer term trend lines connecting the pivots from previous areas and the pivot bottoms, all connected as an X marks the spot like a little cradle. And in addition to that, there was a gap fill here and a gap fill here, both which caught price and then just rebounded. Now, something about Zillow that's interesting, with CPI data being higher and then the 10-year yield going higher, that says that rates are going to be higher for longer. So that means that getting your mortgage is going to be a little bit more difficult too. It's going to be more expensive. Although Zillow, it did drop after earnings. Earnings weren't that bad. They didn't really have a miss. They just weren't as much as some analysts expected. But then the 10-year yield spiked, and that also pushed down price, but then it has rebounded. So Zillow and the housing market, apparently right now the markets think it's still going to continue moving forward and doing well.
And something interesting, would you consider that a head and shoulders pattern on Zillow?
Yes, most definitely would. I see what you're saying right here.
Yep.
And it's outlined with the neckline right here. The yellow trend line would be that neckline. So yes, should this break, the first area of support I have is 64.12. And you see though, we've had a tremendous bounce off of these trend lines. So the likelihood of it breaking tomorrow or even the next day is very slim. Still could happen. But yes, that would be a head and shoulder pattern. Great spot there.
Cool, awesome.
Yeah. All right. So that's it for my analysis on the charts.
Yeah, thank you guys so much for joining us at Trading the Close. Again, my name is Lawton Ho. This is Drew Dosek. We'll see you later. But first, we have a message from our friends at Bluefin. Hey guys, Lawton with Verified Investing here. We're back with another video. Last video I told you I was going to show you how to trade, so let's get right into it. Let's say you want to trade Pepe USDT, right? So in this case, let's say I'm looking at the chart action and I think that this sideways consolidation means Pepe should go up. Well, I can put amount of Pepe I want or the amount of US dollars I'd like to put into this. In this case, let's say I'm going to put $150, but since I'm can use 10 times leverage, it's going to cost me, you see here, only $15. So let's buy it by market price, and it looks like I'm in. Another thing I could do is drag this and put in a stop loss. I can also add a take profit up here. So now my levels are in. I have a stop loss, a take profit, and my order's been filled. So it's just that easy to trade with Bluefin. All right, tune in next time where I show you about copy trading and some of the other cool things that Bluefin has to offer.